Good afternoon, everybody, and welcome to this edition of our Ask the Experts for Tuesday, May 25. My name is Carl Capolingua, and I'm the market analyst over here at Think Markets Australia. It is a pleasure to be with you today as really we throw the agenda over to you. You set the agenda, you set the tone of this catch-up. I'm at your disposal. We'll do that after we talk about the Think Markets difference, which is substantial $8 flat rate trades, your own holder identification number, unlimited phone support, and of course, no hidden platform or subscription fees. For fantastic reasons to make sure your next ASX share trade is with Think Markets. And if you are new to the Think Markets family and open an account, get trading before June 30, the first 5 trades are on us. There are some T's and C's, so head to the website for further details. As suggested, pretty simple. Over to you. I've got a few suggestions coming in already, so I'll head to the charts. In today's presentation, I will do my best to find some fundamentals on the stock you're asking about. Sometimes there are very few fundamentals on that particular stock, or financials is probably the better way to put it. So I do use Thomson Reuters broker consensus data, and I'll try and draw some conclusions from that for you, and then obviously look at the technical side of things with the chart. The first one we've got in today, we'll do that one from Nicholas, which is ASIA, and this is an exchange-traded fund. As the name suggests, something to do with Asia, and it's something to do with technology targets. So it does have the big names that you would have heard of. So, for example, Tencent Holdings, Baidu, a few of those other ones out there, those sort of big Asian technology names. It has been caught up more recently in this broad, really global technology sell-off where interest rates spiked up, and stocks that have earnings that are expected to be further out. Doesn't mean they don't have earnings or those earnings aren't going to be fantastic, but because they're further out in time through this thing we call the discount rate, when interest rates go up and the discount rate goes up, those earnings are less valuable. It's a bit of a long story on that one, but there is a reason why these stocks have pulled back. Just looking at these from the technical side of things, because I can't go into the fundamentals for every single stock in that index. I actually probably couldn't even access them if I wanted to. So let's just stick with the technicals on this, because the technicals is just reflecting the demand-supply environment. People, let's keep it simple, either have cash or they have shares. Let's keep it a very simple 2-asset universe. If they've got cash, they're looking to invest and earn a return. If they've got shares, they've got risk. Okay, so shares is another word for risk. So we've got this ebb and flow between cash or safety and risk. If you've got cash, are you going to take the risk by putting it into a share right now? If you've got the share, would you prefer to be in cash? So that's really what's driving demand and supply on any security that we're looking at. And the technicals are just telling us what is the ebb and flow of that demand and supply over various timeframes. I like to use moving averages to give me an indication of what the various trends are over those timeframes. So shorter term moving averages, for example, here I'll try and hover over that. Well, it's probably quicker just to do this, and it'll actually show it to you rather than me tell you. So the short-term trends, I like to use the 21-period exponential moving averages and the 34-period exponential moving averages. And these are things freely available on your charting software. In fact, on your Think Trader app, you can quite easily pull up those moving averages, put them on your chart. They might not look as pretty as mine. I'm using a different charting package here. It's just one I've used for over a decade now. It's called Amy Broker. It's a one-off purchase cost. It's got nothing to do with Think Markets. There's no broking attached. It's just a pure standalone charting package, and then you need a data feed to feed into it. It's just what I like, and that's why we're using it today. For the longer-term trends, I like to use my 144 exponential moving averages and my 233 exponential moving averages, and you can put that on your Think Trader app. And the trends are telling me that we are in a well-established short-term downtrend. So short-term downtrend has been in place since March, and we saw significant contraction in that through sort of late February. But the fact it's pink and well established is not a good sign. In terms of the longer term trend, it's still up/neutral at this point in time. The fact that we have pushed below it is not a great sign. So that's concerning. And what we tend to find quite regularly is that historically the long-term trend zones and often the short-term trend zones act as dynamic support. Dynamic because they keep moving, they're moving averages, and support because when the price hits back into that area, it tends to bounce off. And we see here, here, and here. The problem is that once we break through these support zones, they tend to stop acting as support and tend to start acting as resistance. And that's potentially what we're seeing right now. Long story short, the trends aren't looking conducive to this one seeing a strong upwards price move in the near future. I wish I had better news for you, but I don't make the news. I just read the news, as it were. That is the charts. So that one is for Nicholas. Buy, hold, sell recommendation, I guess. Would I buy this? No, I wouldn't. I can't buy this until I see, and I'll draw for you what I need to see. So imagine this happening over there on the far right-hand side. Obviously, we're heading down at the moment, so that's the first move. We've had this sort of low already sort of set in. There's a little bit of a pullback now, and I need to see that start to move higher in this sort of rising W formation. And the only way you can really get this rising W formation is if we've got sufficient demand in the system and that demand is building, okay? And that demand is starting to overwhelm the supply that's in the market. So until we see this pattern, I can't get too excited on Asia, and that would probably occur around about that 1150 level. If I had it, would I hold it? I think there's just enough, and only just enough in there just to hang in there for the time being, but I'd be very concerned. Okay, next one is CSL, which actually looks quite interesting right now. It's coming up. This one has pushed back above its long-term downtrend zone, and we've actually pushed back above that, so that's positive. It's kind of the opposite to ASIA, isn't it? We're hoping now that this goes from being a resistance zone to moving forward a support zone, but that is yet to be seen because we haven't really tested it since we've been above it. Nonetheless, the candles are constructive. We can see a number of very solid white candles coming in here, and we have moved back into those higher peaks and higher troughs. The short-term trend is up, and that's constructive as well. The only problem I have with CSL is that obviously long-term downtrend is technically still in place and is in transition phase, so it's not a bottom left, top right sort of trade. It's more of a turnaround play. And because it's a turnaround play, you do tend to have these resistance levels all the way back up. So areas where you might see some supply coming into the market to cause prices to, at the very least, take a pause. So if I had to give you a buy, hold, sell on that one, would I buy it? Not just yet. Probably not far away from it. If we saw, again, a pullback, so imagine from here, we sort of pulled back and then started to head back up again. And in this zone here, if you could imagine this all happening somewhere around here. It's some nice candles, and candles that are pretty similar to these white ones in here, potentially something like that one there with a nice long lower shadow. If that happens on a pullback into here, confirming this transition into an uptrend, then I'd get far more excited. For now, if I had it, I would certainly hold it. However, as promised, we can't completely ignore the fundamentals. So on a different screen here, I'm going to type in CSL into my fundamental analysis spreadsheet, and this draws upon literally thousands of data points from Thomson Reuters, but it tells me a number of important things. For example, we're looking at sort of an average growth rate from this year and the next couple of years of about 8%, which makes it sort of a low to modest growth stock. And based upon that, we're looking at sort of good value around about $73. So that goes to show that the growth in the business certainly doesn't justify the PE of about 40. So, but that's CSL. That's not news. That's just the way CSL operates. It somehow manages to justify a 40 PE for a stock that probably should have a 15 PE. So anyway, make of that what you will. Not particularly cheap is the message there from me on the fundamentals, but the chart is starting to look half interesting. So this is Dubba. It's one of those technology stocks that has actually bucked the trend and continued in the uptrend. Short-term trend looks very good. The long-term trend looks very good. So that's the light green and dark green zones respectively. The fact it's still in trend is amazing. If we zoom out, we can see that unlike CSL, there's nothing really in its history to get in its way should it continue to rise. So that's also very constructive. Anything to worry about? Anything to worry about? I think maybe what John is wondering about. I'm guessing he's probably got it. I'm wondering whether you should hang in there. I think there's plenty of evidence that we should hang in there. There is some concern in this move here with the candles. It indicates there is some supply in the system. There's for me, no surprise that we're seeing some supply because it's happening at this round number here at $3. And you do tend to find that stocks are prone to this, moving in sort of round number increments. Let me try and convince you on a total case study sample size of 1, but there's certainly some congestion around the $1 zone. I wish that was a little higher, but it's not far away from it, to be fair, around the $2 zone. And then we are certainly having some congestion at the $3 zone. And the reason for that is quite simple. It's just human nature. When we should buy something at around 50 cents and stock starts to go up, if we're lucky enough, we've actually got one that's going up. If we buy it at 50 cents, not everybody thinks this way, but many people who did get it at 50 cents have probably already penciled in a target in their mind of $1. The people who tend to buy it around, who bought it around $1 tend to think, well, geez, if this got to $2, I'd be pretty happy with that. And then we see many of the people who probably got in at $1 here were getting out in advance of $2 here, and then so on and so forth. So no surprise that there's a little bit of supply around here. So that's encouraging in that it may just be a round number related supply. The fact that we've had 2 little goes at it is a little bit disturbing, and the nature of the candles on the second go. Sorry, waiting for arrows to appear. Yeah, look, if I had it, I would certainly hang on to it on the basis of what is a wonderful and well-established uptrend. If I didn't have it, I think you've got every reason to look at this as a prospective buy based upon the technicals. It's not because I think it's fantastic, it's because the market thinks it's fantastic. The people who have cash, they don't want to hold that cash. They want to own DUB shares. The people who have the shares, they don't want to sell them. A few of them are getting out because it's $3 probably, but otherwise they're hanging on to them. So plenty of demand, very little supply. So if I had it, I'd hold on to it on the basis of the trend. If I didn't have it, I want to see how it interacts in here. Let's just see if we can string together some decent candles. There's some encouraging candles in here. This one. A little shadow today. Maybe if that turns white, maybe if we get a nice white candle in tomorrow, that could be constructive. So it'd be one you'd have to ask me about on a daily basis to see how this demand is developing, and if we are going to see continuing build through here. As the supply dissipates, with that build we can push through. But otherwise it looks great. Let's have a look at the next one. Okay, we've got from Craig thoughts on MATIC, USD in the crypto world. Good, let's head over to the crypto space. I actually don't have data for that in this particular charting package, so I have to go somewhere else for that, for MATIC, MATIC. Another way to do it is to go through what I probably should be doing, which is the Think Market platform, but this is just the one I can get the data very quickly on. Obviously, because it's not in my native environment, I don't have the indicators that I usually use, but I can certainly look at the price action, which looks constructive given the amount of damage that has been done to some of the other cryptos. It's supportive of this project that level there held, in fact. And we didn't see a close beneath this point of demand here on the 30th of April. It's had a very strong bounce back. This candle here, it would be great if we didn't have that shadow, but we do. But otherwise, yeah, look, I think this is easily one of the better performing cryptos out there. And if I had it, I would certainly hang on to it at this stage, but expect, as they say in the classics, they're just volatile just by their nature. So if I tell you to hang on to it and it's down 10% tomorrow, don't blame me, sort of thing, because it's every probability that can happen. But I think it's one of the better looking cryptos out there, Craig. And I will do a little bit more research into that one actually, because, and this is kind of going to be the recurring theme through this presentation. You can only do so much research. There's thousands, millions of people out there doing research, and they vote with their cash. And the fact that one has done so well means there's probably a reason for it, and I need to go and investigate that reason. Next one is PLS, which is Pilbara Minerals. And I like this one. It's very interesting. It's had obviously a fantastic run through here. It is building, hopefully, what is a strong basing pattern from which it can maybe launch its next up move. It's still too early to tell whether that's going to be the case, or we are in something, and in the textbook case, I'm just going to change databases here because it's illustrative. The textbook case is this one, John, that you want to watch out for, and it's Bitcoin. And you might say, well, what has Bitcoin got to do with Pilbara Minerals. One's a lithium stock and one's the world's original cryptocurrency. And they've got nothing to do with each other, but except for that demand and supply. Regardless of what you're trading, you get very similar patterns in demand and supply. So Pilbara, I would say, equate the move up with this move up in Bitcoin. We'd equate this sort of basing pattern we're in right now with this equilibrium phase. So we've gone from a phase which I call a demand side phase, where demand is significantly greater than supply. When we have rallies, those rallies are bigger than when we have pullbacks. Then we go into what I call the equilibrium phase, where demand and supply are far closer together, rather than that really restricted supply in the market where nobody wants to sell and everybody wants to buy. We've found some sellers for whatever reason, and it could be a big round number, it could be an Elon Musk tweet. For Pilbara Minerals, it could be simply that the next bit of news that they require to push them forward is now 6 months or 12 months down the track, and we just have to wait for it, and people get bored. Perhaps. The risk then is that if we break through the bottom of generally what is a well-defined range within that equilibrium zone, where supply is greater than demand for whatever reason, people are leaving that story and looking for other more exciting stories, perhaps. So that is the risk there for PLS, and hopefully you can see some of the similarities there, whether we go back from demand now in equilibrium, whether we break through the bottom of the zone, we go supply side, or we push through the top of the zone and go back to demand side. The candles there's nothing there. There's not a whole lot there, really. Even the price action, this is a little disturbing, but then I could easily draw one there, and we've already got too many lines on the chart, don't we? But we were talking about concepts. Yeah, I'd be a little concerned if we broke through that low there, which is 105. I wouldn't want to see that, because it means we're kind of living in the bottom of that range, and it just gets more and more people nervous who might want to go look for something more exciting, and then you get that tip out. Look, it's worth holding with a very tight leash. I promised that we would look at the fundamentals for Dubber coming over. Don't have a lot of information here, unfortunately, for John, who asked that question also. It's, without that data, it would take me a whole morning or a whole afternoon to go and do the fundamental research to fill in those blanks. Clearly I don't have time to do that today. Okay, let's get through a few more here. We've got PRL, and this one is from Bipin. Province Resources, guessing one of those little mining stocks. It's got something going for it. It's obviously had a pretty good run. Bipin, you've probably done enough of these with me to start to look at the chart and draw your own conclusions. I think whilst we were holding above that short-term dynamic trend zone, I think we were pretty happy to hold. I think now that we're below it, we're starting to get a little bit concerned. The long-term trend is still up, but otherwise, yeah, there's not a lot to get excited about here, and I wish I had better news for you, assuming you're a holder. But with the candles, you can see how many black candles are in there. Remember, black candles just equal supply. The stock is up on the day. And Bipin, if you've been watching this one, you know how this feels. The stock opens pretty flat on the day, or it even opens up on the day, and you go, wow, this looks I'm really happy with the way this is going today. And then you tune in after the market closes, and it's down, it's closed on the lows. And you go, oh, that doesn't feel so good now. And you're not the only one feeling that. There's a bunch of other shareholders that are looking at this going, you know what, every time I think this is going to go well, it doesn't. And the reason for that is because somebody out there is selling it every time it looks good. And if this was really the one, this was going to be the next Fortescue Metals or the next Galaxy or Orocobre or whatever it is, why would the people who have it be behaving like that? And even if they were behaving like that, why wouldn't there be enough buyers, enough people with demand out there who really believe the story to soak up that supply? And it's just not the case. And we don't know the reasons. We can never know the reasons why people are doing things, but we can see what they're doing on the chart, and what they're doing at the moment is creating a bit more supply than demand. So that would be a pass for me. If I had it, I'd be pretty concerned about it. If I didn't have it, no, I wouldn't be buying it. And just to add some colour around that, Bipin says they've got a green hydrogen project in WA. And look, that's why I like my charts. I don't need to know. I don't need to know what they've got. I just need to know what everybody else thinks about what they've got. This one is Janison Education. Hey, this one looks really interesting. So this one's also from Bipin. So this one's 1 out of 2 perhaps. Short-term trend looks really good. The candles, there's a few black ones in there. That's always a little bit disconcerting, but there's probably enough white ones in there and white ones with the right shapes to indicate to me that there is enough demand around to keep propelling this one higher. I do like the way it came back in here, and instead of having those black candles in here, we actually had a fair bit of buying in here, just sort of supporting it and pushing back off that support zone. The long-term trend has turned up. I really like this one. I'd be happy to go out and buy this today. Yeah, look, it's obviously a more speculative one. It's a smaller one. I can see just from the sketchiness of the chart. I can see from the history back here. And when my moving averages do this, it's probably because it was a company, a different company that had this new business vended into it. We call it a backdoor listing. And we've still got all that historical price action from the old company that messes with my long-term moving averages, unfortunately. But Bipin, I like this one. Yeah, I'd be happy to go out and buy that right now. I will check also for you, Bipin, whether we've got any fundamental numbers on it. I doubt it, but hey, let's check it out. No harm. Next one from Nicholas is MFG, which is the big fund manager, Magellan Financial Group. Yeah, a little bit concerned about this one. Look, again, if you've listened to me long enough, you should be able to. You're probably shouting at your screen right now, Carl. Long-term downtrend. Short-term downtrend, candles are too black, price action's no good. You're probably shouting at these, and that's a good thing. It's a pass for me. Look, if I had it, I'd be concerned. It's not looking great. If I didn't have it, no, I can't buy this one because I don't think the market believes in this story. There is one I did see the other day, and maybe we can compare and contrast. So these guys are in a very similar space. This is Ioof Holdings, another fund manager. And we can see that the chart's quite different. So similar space, but very different charts. So where Magellan has a short-term downtrend, is well below its well-established long-term downtrend, this one is actually pushing into that downtrend range. And we can see here how in the past this zone has resisted upward price movement. Here, it's like clockwork. So when I see the price hit that zone and not go down, in fact, not go down, but actually starts to push towards the top of that zone. It's starting to do it with some increasingly white candles, with some price action that's starting to resemble higher peaks and higher troughs. I don't know if this is going to start drawing. Maybe it is, maybe it's not. There we go. Kind of. That starts to get very interesting for me. So if I had to pick one in the space, I think this one looks very interesting. Sorry to go off on a tangent there, Nicholas, but MFG is a no-no for me. One's come in there, MQG. Whilst we're waiting for the other stock, the lucky one more to come in, let's see if we've got any fundamentals on Janison Education. Interestingly, we do. It is a company that has flip-flopped between making money and losing money, but is expected to get back in the black over the next couple of years by the brokers, with some pretty substantial growth rates actually coming through. So that's quite interesting in itself. And yeah, look, it's trading on a PE of about 112, so you would hardly call it cheap. But with that growth rate, not too shabby. Let's go 100 in there, and it's going to change things a little bit. So my model is saying that if it does fulfill this sort of growth rate that the brokers are expecting, it puts it into the category of a high growth company, which justifies higher price to earnings ratios. And that would suggest that it would be good value around about 42 cents, fair value around about 63 cents, and quite fully valued around about 84 cents. So the trend looks great, but you would hardly say it's the cheapest stock out there. Doesn't change what I said about whether I'd buy it or not. I'd always defer to the chart. Let's have a look. If I can get a bargain, though, that creates higher conviction. Last two for today, Macquarie Group and NWL. So MQG first, and this one we will definitely have some fundamentals on. So let me get those going in the background. Chart looks pretty constructive. Long-term uptrend, definitely intact. Short-term uptrend is down, but part of that is to do with the dividend, which my guess is the dividend was here. So it's probably not as bad as it looks. And I do like these candles here. I think this is really impressive. 1, sort of 2, 3, 4 out of the last 6 candles. There's plenty of demand in the system here. There are fund managers that are literally just soaking this one up right now. And it's not surprising to see that demand come in around about the 150 round number again, surprise. So people that maybe when it was 160 said, well, I like it. It's a bit overvalued. I prefer it at 150. Hey, it's there right now. And it's also at a previous point of resistance. And we do find that previous points of resistance, or points of supply, as I like to call them, tend to act as points of demand going forward. Close enough, I think, to that long-term trend zone. If I had it, I would 100% hold on to it. If I didn't have it, I was looking to add something a bit more long-term, a bit more stable to my portfolio, yeah, I'd certainly consider it here. Looks interesting. Well, see, the problem there is the growth rate is very low. Even if we said, sort of 10% growth rate, it's still pretty expensive, I'd say. Great value 137. No, it's actually somewhere between sort of good and great value. So it's actually not that expensive based upon my fundamental valuation model here, and which again is based upon broker numbers. So it's a yes for me on Macquarie. And let's go to NWL. And this is the last one for today, everybody. Charts, disturbing. What do you reckon? Hopefully you're all screaming at your computers right now. Short-term downtrend, Carl, lots of black candles, price action looks pretty terrible. Long-term trend zone going from support to resistance. It's concerning. It's concerning for me. I want stocks that are doing this, sort of in this sort of mode, and it's tough because how do you know when to get out of those stocks, because they don't do that all the time. They move into equilibrium zones like this, and that's when you start to put tighter stops on them. You start to really ask serious questions about them, because there's always other stocks that are still in this zone, and then maybe when they start to break down from here, you just start to be out of them. I don't think you're too far off that in terms of price, but I'd just rather be somewhere else right now than NWL. So it's a pass for me. John is stuck in WGO. Let's do that one and then finish. I'm just going to put the fundamentals of NWL on screen, which is obviously Netwealth, and the EPS growth average of about 18%. It's saying good value at 8.35. And we're miles off that. So it's one of those high growth, high PE stocks, which the market justifies to itself in its own mind when interest rates are very low and heading lower, and then the market just struggles to digest when those rates go back up. So you go PE expansion, PE contraction, and it just has a tough time. It's a death of 1,000 cuts. It's still a pass from me, having seen the fundamental valuation. Warrego Energy looks very interesting. It's one of those maybe little speckies you have. It's 0.5%, no more than 1% of your portfolio. Short-term trend is interesting, but it is a big basing pattern. Something needs to happen, needs to get going. I don't know what that catalyst will be. I'm sure John knows where they're drilling and what they're hoping to achieve. In fact, correct me if I'm wrong, this is is it a uranium stock? WGO. I just wanted to flick to the other chart to see the volume, and let's see if we can't make some sense of what's going on here. Interesting that volume came on that particular candle. Doesn't really scream supply removal to me, but it doesn't really scream that there's a lot of supply in the system either now. It's a weird one. Look, on the basis of it's a very, very small part of the portfolio, looking at those trends, happy to buy, thinking that whatever news is in the system, it might have a little pop into the 30s. Sorry. Okay, that's it for me today, everybody. Let's just wrap up with the slides. Thanks to everyone who sent in suggestions. You can catch all of our market news updates and more in our market news section of the website. If you like, you can follow me, all the Think Markets handles on Twitter. Are they up to date? No, then that's not up to date. Sorry, pardon me. That we are obviously in Ask the Experts. We have done that. We did the 3 ASX stocks last week, but it is relevant that on Tuesday, 1st of June, which is next week, around this time, I will be giving you an educational webinar on how to use price action to spot trading signals, and it'll just give you that extra little tool in your toolkit on how to read those charts. The disclaimer before I leave you today says that everything we've discussed is general in nature. I've given you lots of my own views and opinions based upon over 20 years of looking at charts and looking at stocks, but they're my views and opinions. You need to decide what you are going to do from here. We are a regulated Australian broker, and we do have some products that could see you lose more than your deposit, so it is important you understand some of the risks around some of these products. The disclaimer is a good place to start. If you have any other questions, certainly give us a call. It has been a pleasure chatting with you today. All the best for your trading until we catch up again. Bye-bye for now.